Hey everyone, it's Jenny Lynn, Lend by Jen.
Sam Mai, the mortgage guy.
AJ Cervello, Lender Maestro.
And I'm Peter Ryu, MortgageByRyu, and we are your NAF Bellevue team. This whole podcast is called Breaking Barriers because we'll be talking about the goods, the bads, and the ugly of the mortgage industry. So one of the things that I wanted to ask you guys was, I want you guys to share a personal experience that you had to overcome in the lending industry.
Ooh, that's a good one.
It is a good one. Share personal experiences that you have overcame.
I think when I first started the mortgage industry, I was surrounded by a lot of people who weren't predominantly looking like me. And just being a woman in the industry, I was in front of a ton of male figures. And so I feel like when I first started in the industry, it was really hard for me to speak up or share some of my knowledge because I was in a room full of people who didn't necessarily give me that platform at the beginning, right? Now that was years ago and things have changed then, but it took me being very confident with what I'm gonna share, me standing up for myself and really creating that space for me and showing the value I can bring to the table, for them to start respecting me and just like looking at me as like a professional figure.
All right, so my experience in my earlier years when I used to work for a big bank, I'm not going to name any specific names, even though they might know who I am. In any case, a lot of them, they told me, you got to get out there and find realtors because realtors, if you don't talk to them, you're not going to get any business. You're only getting business from the bank, and that's not quite enough. And to overcome that obstacle really was just me leaving the bank because I had to get out there. I didn't rely on a crutch from the bank from giving me leads to help get some deals done to keep my job secure. So leaving the bank allowed me to open up the gates, and I found out from realtors that they don't like working with people at the banks anyway because they take forever to close.
True that.
You know what I mean?
Yeah.
I'm like, wait a second. No wonder none of you guys wanted to talk to me. I'm like calling everybody, and they're like, it's really difficult. Yeah. But now that you're out in the field with these other realtors, it's a whole different ball game. Now you're rubbing shoulders with them versus being an order taker.
Yeah.
So
yeah. What about you, Sam?
Leaving the bank must have been hard, AJ, because for me, I had to leave the big bank too. And the bank they got the brand name, they got their big company. Leaving them was a decision I had to make because mainly the processing time, because they're such a big bank, they don't communicate together as fast. They don't get things done on the deadline that we need to get them done, especially when we have our partners and our realtors relying on that. And it's something that you had to do if you're going to grow in this mortgage industry. That's why AJ left, and that's why I left as well.
Wait, you left because I left?
No.
Yeah, for me, so this was in, I think, 2003, 2004. I actually started my mortgage career at a small brokerage, and one of the biggest things that I had to overcome was there was no mentorship. I just had a managing broker, and I just say, hey, here's a scenario, and he was just like, yep, we can do it. And back then we could do it. It's like stated income, knowing ninja loans, right? But definitely now there's definite proven paths and mentorship programs, like we provide here, that will help loan officers.
So now talking about how it used to be, we had the history of this, but how do we think the mortgage industry has evolved from those times, or even last year? Because it changes so much. But I want to hear what everybody else thinks about it. How has things evolved, the mortgage industry?
Well, I'll start. So I'll start off with saying that pre-housing crash, anyone could be a loan officer. I remember going to Nordstrom's and someone was saying like, oh, I'm going to buy my son a loan officer shirt. But now there are steps and processes. You have to take tests. There's background checks, it makes the profession a more valid profession than just I just walk up to a bank and decide that, hey, I want to be a loan officer. So I feel like that's one of the things that's really separated us as a mortgage industry.
Yeah, all the regulations, I believe in the regulations, to be honest. It's actually helped. We don't feel sleazy car salesmen and we feel like we're professionals, like you mentioned,
Guidelines are there to put in place so people can actually qualify for their loans. You got to make enough money to borrow money. So that's what's changed. And I think that's why the mortgage industry has been kind of going strong, even with rates kind of high. We have more qualified borrowers that actually are in these loans. So,
yeah, I think it goes beyond all of that, right? And even education. There's a lot more education for home buyers and for homeowners. I feel like back in the day that a lot of people weren't educated and they didn't know where to get that education or what resources they had available. And now you see a lot of loan officers like ourselves and people in the real estate industry going out there working to help homeowners, future homeowners, just people understand what it's like and what the industry, what the rates, economics, just everything, what it looks like. And I think education plays a huge role now than it used to.
Yeah. I mean, so do you think maybe the future of today, even people are going to have to be more educated even further? Because, education is key. Everything's always changing. So the evolution's always there. So I think you're right. I think you hit it on the head. And more education.
Yeah.
Well, I think access to information.
Access.
There you go. Yep.
I think
internet wasn't very.
Yeah.
It wasn't huge. We didn't have social media back in the day, so you couldn't follow a Lend by Jen or Lend Maestro to get information about, hey, how much down do I need to put to buy a house?
I think consumers heavily relied on the loan officer. Now it's like they're willing to do it because they have access to things. They can definitely do research in addition to working with trusted loan officers.
all right, so how do you guys think NAF, New American Funding, promoted diversity and inclusivity in the real estate industry?
Well, first of all, our company is owned by minorities, Patty and Rick. And so they have a lot of organizations even within the company that promotes diversity, like NAF Dream is to really help Black originators, build a platform.
I've seen Spanish everywhere too. And I'm like, all right, that's good.
Yeah.
I don't speak Spanish, but
Application.
This does.
What do you guys think about the application?
Yeah, a lot of our technology and a lot of how we do things can be translated into different languages now, and you have a lot more representation from loan officers coming from different cultures that can assist consumers, right? And so I feel like New American Funding did a really great job of providing access for representation, but also access to education to get the word out, to see more diversity in the home ownership. So guys, what are the most common barriers individuals are facing when they're seeking loans, and how do we address that?
Language barriers. Again, I don't speak Chinese. I speak English. I don't speak Spanish. There's a lot of those. That's the only barrier that I can see, or a client not being forthright on their loan application.
So I'll say culturally, credit is looked at very differently. So if you look at, there's a lot of Chinese, Asian influenced, or people from the Asian culture that are purchasing homes in the U.S. and they're newly citizens or on a visa. And they view credit very differently in Asia. If you don't have any credit, that's good. Whereas in the U.S., you have to have some kind of debt to generate a credit score. So people coming in, paying everything cash, they think, oh, I'm fine. I'm not gonna have any problems buying a home. But with a lot of lenders, some investors, especially like jumbo investors, they're going to require you to have 3 to 4 credit lines.
Yeah.
Just like we were talking about earlier, borrowers, people are more informed today, but they're not informed enough. There's a stigma where ARMs are always bad, but there are times when ARMs are good, especially when rates are high. And then we hear rates are going down later this year. That's an advantage for an ARM. So, and the programs for our, our different diversity, we have programs where you don't have to have a social security number. There's I-10 loans. I mean, a lot of them, they don't know that. And that's where we kind of come into play. We got to educate our realtors. We got to educate our clients, our families and friends that, hey, we got these programs available that you can get into a house as well.
Yeah. And I think one of the biggest things too is you don't need 20% down payment to get into a mortgage or to buy a home. There's so many different loan programs out there. Millennials to this day, there's still a huge percentage of people who don't know that you don't need 20% down. So
stop with the TikTok videos. You don't need 20% down. Figure it out. You notice that? Every time you scroll, it's like, you don't need 20% down. And then the next one, you don't need 20% down. Next one. I'm like, okay, let's come up with some new content.
But it's true. I feel like when I still talk to certain millennials or age groups,
I don't got the 20% down, bro.
Yeah. You're like, you don't need it.
Okay, so we've talked, we've all have like save the day stories, but name a time when you successfully helped a client overcome financial barriers and help them achieve the American dream of buying a home.
That's so loaded. I mean, there's so many different ways, like helping people with their credit. We're not credit specialists, but we can at least do things like rapid rescores. We can, if they are self-employed, maybe a bank statement loan, because they walk into a bank and the banks only have a handful of different loan programs. They can't do the bank statement loans. They just look for tax returns or W-2s. So with the bank statement loan, as a self-employed person, it's more beneficial because then they can look at all the money that's come in and then a percentage of the money that's been going out. And then you qualify for more.
Mm-hmm. Fighting with the underwriters. We're always trying to fight for our borrowers in their situation. And there are certain things that the underwriters have under their discretion. And it's how they interpret the rules. It's kind of like when you're playing football and the refs throw a flag and it's kind of in the gray area. Well, we have that too here in mortgage. And a lot of times in the background, we're fighting for our clients to try to get the underwriter to understand that, hey, they qualify, this makes sense. And if it makes sense and you have the managers that support us, we can get this to go through. And especially here at where we're at right now, it's a lot more support.
Yeah, you want to talk about like homeless to home ownership. I had a client who was going through homelessness and went around, she had a bank, right? No one took the time to teach her how to build credit or how to position herself to earn some income or, give her those type of resources. And sometimes it's really hard because you do find people like that, and that's what I did. I took the time to spend with her, put her in the position, and it took some time, but finally, from homelessness to home ownership, that was a huge achievement for her and for her to put her family in there. And she had kids. And so that was something I felt like was my proud accomplishment in this industry.
Wow, you just pulled on my heartstrings on that one.
Yeah.
That's deep.
Yeah.
Yeah, there was some tears shed.
That's deep.
Another demographic is veterans. Did you know that only 1 out of 3 veterans know about their eligibility? Yeah. And that's crazy because a majority of veterans can be homeowners today, but they just don't know how. And so I can think of a couple stories of how veterans have been just renters their whole life, and a buddy of theirs said, hey, talk to, Peter or whoever, and just going through the process, they were like, I didn't know. I didn't know. Even though there's all this information out there, they do so much for our country, right? Our freedom and all that. I mean, that's what America was built on. But that is, we need to get more information out there for the veterans.
So how is the technology that we have being leveraged to make the home buying process more easier and accessible?
COVID sped that up. I mean, there's a lot more e-signing. We see a lot of DocuSign. It helps. It makes things go a lot faster.
Yeah, social media. I mean, access, right? Social media has been huge for me, just sharing and educating people and putting out videos, so that would maybe benefit everyone.
I think for me, I think the soft pull credit, that's really something new that we can actually do, at New American, but so, some companies don't allow it, but this allows people to just kind of test the waters of, hey, how much can I qualify for? How bad is my credit? But I feel like that's kind of a game changer, right? Like people are willing to apply, but they don't want to get their credit pulled because they're afraid that it's going to bring their credit score down.
Yeah. I mean, especially people who are on the fence.
Yeah.
Oh, like moving like today versus 6 months from now. And if that soft pull would just help, make that connection of what they're qualified for, and then they might make a decision to move a lot faster and get in while the market is at a lower price point.
Oh yeah, no. Online applications, straight from the touch of the phone. They can do everything, apply, click, and next thing you know, you can get a pre-approval. So technology has sped up that process.
For sure. It's only like 5 to 10 minutes, 15 if you don't have the information in front of you. It's really easy now.
Yeah.
Probably like my first 10 applications, like I had to meet them face to face. I had to bring a pen and paper, and literally we fill out the 1003. And so now the fact that you could just go on your phone and literally in minutes, that's amazing.
Yeah.
Yay.
And as a loan officer, we can actually monitor majority of the stuff, not all the personals, but right from our phones too. It's helped us out.
It's more secure. There's a portal they can upload their documents. What do you guys think about how you give someone who's looking to become a loan officer, especially those from backgrounds that are not represented?
Don't do it. I'm just kidding. No.
I actually have a lot of friends that hit me up all the time, like, "Hey, how can I get into the business?" And well, it's almost like you want to be a friend and also help them understand that there's a lot of trials and tribulations that we go through as loan officers. And would you want to put someone through that? It's tough. I mean, it's like if you're working a plush job or even a decent job and you're making pretty decent money, and then you're going to go into something that we do where it's feast or famine.
Yeah.
Like we don't have a salary. We don't have an hourly. We're not getting tips, and it's if you really want to do it and you've just talk to us a little bit and figure out, what are the ins and outs of it. It's not pretty.
So save up some money.
Save up some money. Yeah,
build a 6 month reserve.
6 month reserve for sure. Yeah.
Yeah. I mean, if you want to go get licensed, we can give you the instructions on how to do it. But the things that they don't tell you are the things that you need to do. Go interview loan officers and understand what the business looks like, because, you are the CEO of your own business when you jump into fields like ours. While we work together and collaboratively, at the end of the day, we're still our own individual business, and we have to feed our family.
Yeah, I think what a lot of people don't realize is the 100% commission part. Mm-hmm. They think that, hey, if your rates are higher or lower, your income is affected by it, and that's all changed since the housing crash. But one advice I'd give is like to job shadow for sure, because professional sales is I feel like a whole different animal. There's sales and there's professional sales. I feel like where you can't just talk your way through things. You actually have to know stuff, right? You have to know guidelines. You have to be able to talk with realtors to help your clients get their offers accepted. And then as far as like client standpoint, there are so many different types of clients. People that only, I'm sure you guys have clients that only want to meet with you face to face. And then you have millennial clients who only want to text you,
Yeah.
right?
Yeah.
And so to be able to adapt, I feel like is one of the most key things to be successful in our industry.
Yes. And yeah, being communicative. It's a huge thing too. If you're not communicative, the client will feel, like they're scared or they'll if they're not 100% with you, they don't trust you, they'll go somewhere else. So as a newbie, you're going to feel less confident. And it is better to, shadow, like Peter had said, because if you go off on your own, you get really gung-ho, you got this fire burning in you, that flame will go out quick.
So what I'm hearing is support.
Yeah, you need that support.
You have somebody to like look after you, be able to show you the ropes, and it's important in anything. Support is big.
Yeah. So you guys, what are some common misconceptions about the lending process that we frequently encounter, and how do you guys address it?
Let's start with Sam.
Sam.
I was mentioning we fighting with the underwriter earlier. We also have to fight with appraisals, values. We're fighting with our managers to get pricing exceptions to try to make sure that we give our buyers the best deal, especially when they're shopping and looking elsewhere. It's tough. We have to make sure that we're like lawyers. We have to get the evidence that we need in order to support our argument.
Yeah.
Yeah.
Going back to appraisals, one of the things that bugs me is when the realtor or the client thinks that a low appraisal is our fault. And everybody knows that since the housing crash of 07, 08, appraisals are supposed to be unbiased third-party reports. And so for it to be deemed as, this certain bank or this certain lender always comes up with low appraisals, that's really not what, that's not the truth. That's far from the truth.
Yeah. I mean, if we did, that'd be illegal because we were like, hey, this is our appraiser. And we choose this guy to do it. It's a panel. It's like, you can't do that.
Yeah.
Yeah. It's unbiased.
And unethical. It's unethical for us to even have communication with our appraisers. So for those of you who don't know what the appraisal does, what the appraisers do, there's a lot of research that they have to do to get that value, right? And so they go off of the most recent sales in the local area. And so that's something we can't make up. There's real numbers and facts that goes into play. I think one of the other things that, is rates, right? Rates
I was
for
just
misconceptions.
about to say that.
For me, I feel like, when you're working with clients, they're constantly like, oh, can you get me the best rate? Well, is the best rate the best, is that the best for you? Let's take a look at some other factors that maybe you might not have worked through or whatever, right? And I feel like people are shopping and constantly like competing against rates, but really like you can get the lowest rate online, but your service sucks, or like it'll take forever for you to get that closed. And when you call whatever that 1-800 number is, you might not even get a live person.
Yeah.
Go ahead and hit number 1 if you want to talk to a representative and have a long hold. I'm just kidding, no.
You pay what you get.
Exactly.
Yeah, I've recently had that where
I'm sorry, I said that wrong. You get what you pay for.
There you go.
Get what you pay for.
Get what you
I know. It's true. No support. That's the big one. You're not getting the support if you're getting something like that. But yeah, people shop all the time, but then they're like, wait, the rates are just so close with each other. I mean, everyone's pretty competitive out there, but what are you really getting? So don't just text me what's your rates, because it's like, I don't go to your job and say, hey, send me a report, and then not have a relationship or more communication other than that. I email my clients and I'm like, hey, let's hop on a phone call.
Yeah.
I want to be able to talk to you and not let I'm not a robot.
Yeah.
And that's, I think, there's a misconception of a loan officer as someone that just spits out rates because everyone's selling it on the internet so much.
I want to add to that because I feel like, when we're talking about rates, you guys want to save like $10 a month just to go with a lower rate when that's what, $120 a year. when our relationship that we have with the clients we work with is long lasting. And so we can save you $120 and then some, way more than that in the long run, because we're going to be there even after we close on that transaction.
Yeah.
We're there to help you generate wealth. We're there to help you save and make more money. So just consider those factors when you guys are shopping rates, because that $10 a month may mean something to you, but it's invaluable when you're working with lenders, like people who actually care.
Yeah, if that's the case, then it's not us being transactional with it, it's them being transactional with us. And there's no relationship at that point. And how are we going to do a good service and provide more than that, you know?
So it's not that simple. It's not just the rate. I mean, there's other factors that go along with it, like points and stuff that's on the closing costs. But yeah, just like Jen Lynn and AJ is talking about here, you know, we're not transactional. At least I'm not. And when I make a connection with my client, I'm there for them after it closes. They may call me up. They may get divorced and they need some kind of document. I'm able to find it for them same day. That's worth more than $120 a year.
Exactly.
Like Jen was saying.
Exactly.
I worked in that small brokerage, and these older ladies would sell option arms with 3-year hard prepays when they can qualify for better loans,
Yeah.
but it paid them the most commission, right? And so they're steering them towards this, loan product. So, like I said before, you get what you pay for, right? You're going to just trust someone who's just going to, deceive you and put you in certain different, you never know,
Yeah.
right? So let me ask you guys, so financial literacy, there's some programs out there, but how do you think that'll help people, and break barriers to home ownership?
Just understanding like debt to income. Don't go buy a car with $1,000 payment before you buy a house. Buy the house first, and then afterwards you can look into that. But those type of things can affect what you qualify for. Going from that 2-bedroom, 1-bath to the 3-bedroom, 2-bath that you need for your family.
Credit, understanding how that works. And a lot of people in the process of buying a house, they end up thinking, oh, I'm going to go open up a credit card so I can buy more stuff for my next place in the process. And then they pull credit at the last minute and they're like, oh, your DTI is barely over. And unfortunately, we got to figure out how we're going to get you back down underneath that point. So, I don't think, people just need to understand that only get what you're going for. Don't exceed the boundaries of your credit.
Yeah, no one talks about, spending habits or things like that, like real life things that people have to face after high school. And people also don't know that, a 16-year-old can start building credit, as an authorized user. That way when they do turn 18 and they can, they're starting their lives maybe, when they're out there spending money, I feel like what we're seeing out in the media is spending money, right? Going on trips, but no one talks about like how to build credit. No one talks about how you can, generate income and have that, right? They just think that you just got to get a job and that's how you're going to make money, but not really. Like there are other ways that you can do that. And I think financial literacy comes down to like knowing your numbers,
Yeah.
and that's something that's case by case too.
Yeah. Budgeting.
I also think that they need to create specific financial literacy type programs for self-employed borrowers, because a lot of them don't understand that your gross income is not what lenders look at. They look at your expenses. And so there's so many times when they say I make 100, 6 digits.
And they don't.
And then by the time they write off everything, they make very little. Right.
Yeah.
So
35,000 is kind of like the
yeah.
average.
So, but then there are ways to pay less in tax. Like depreciation, and that's how like the CPAs and tax accountants come into play. But definitely, those are some I think key factors to look into. But luckily, we have different types of loan programs, like the bank statement loans.
Yep.
Yeah.
again, like find someone that you can trust. A trusted loan officer, trusted real estate agent, trusted financial advisor, especially if you own a business. You're going to need all those things. You're too busy trying to focus on your business, the thing that you signed up to do because you like to do that. You don't want to mess with all this other paperwork that you're not really informed about or know about, and you can mess up with the taxes, with all that stuff. So make sure that when you own a business, you want to delegate. The smart thing to do is delegate tasks, and one of the ways to do that is utilize the people that are educated in that area and let them do what they do best.
So, what role does community engagement play in fostering inclusivity and overcoming barriers in the lending sector?
I'm like, ask that again.
What role does community engagement play in fostering inclusivity and overcoming barriers in the lending sector?
Yeah, it's just getting the community involved, going out there and educating people. Doesn't matter where you come from, doesn't matter how much money you have, doesn't matter if you're already wealthy. I think education is important, and learning something new from, people like us or people in the industry who's going out there and just sharing up-to-date information for you, because in our industry it is ever so changing.
There's a lot of like nonprofit organizations that are out there that helps home ownership, home affordability. Like that's the biggest issue right now, right? That's why we have a big supply issue, right? There's plenty of demand, but the housing, for example, in Seattle, Washington, is ridiculous, right? I was just talking with an investor friend of mine, and he's talking about how you could buy a home in Florida, waterfront almost for like $600,000. Mm-hmm. Gas is like $2 cheaper. You don't have to worry about, am I gonna fill up my car or can I get something to eat? So definitely, legislative is a big part of it, right? Having a voice to go against Wall Street, and the hedge funds, because in my opinion, I feel like a lot of the supply issues will be resolved if we forced like the Blackstones of the world to sell off their single family residence, because then they own so much, and they can bully us, us consumers, because they're paying in cash. So I mean, yeah, definitely advocating for especially minority owned, minorities looking to be homeowners.
Yeah, but they're just out for profit. So I mean, if we had more, community type of hedge funds.
That's a tough question, though.
Yeah, it is. Yeah.
So why don't we just end with this last question for you guys? So last year rates were all-time high. It was a tough year, low sales, low volume. What do you think is going to happen this year in this market?
Anyone want to go first?
What goes down must come up. It's a better year. I think rates are definitely going to drop a little bit. We're definitely going to see a couple, inventory is still going to be an issue, but we're going to see a lot more buyers who have been waiting. I feel like in the housing industry, they're making it a little bit more affordable. That's why there's like a hold with what the feds had talked about yesterday. And yeah, I think it's going to be positive this year.
Yeah, no, I think that they're talking about rates going down, like Jen said. So when rates go down, that means it's going to be more affordable for people to get into homes. There's a lot of people sitting, waiting in the wings for the right opportunity. People are saying that we're waiting until rates get low. So there's going to be an explosion. As soon as they cut rates, there's going to be an explosion in demand. And, we just need more houses, more inventory.
Yeah, I mean, for consumers, first-time home buyers especially, there's like a small window right now, and then we're in, February 1st of 24 up into May 1st, when that demand you're just talking about, when the feds meet to talk about lowering rates even further, the demand's going to boost, and there's not enough inventory. But right now, between then, there's a window, and of an opportunity, because not only do we have NAF cash for people who are contingent buyers, we have programs for first-time home buyers. The housing prices are still low, and when that demand shoots up, what happens to the prices? They go up, and it makes it harder for those people who wanted to buy or who are waiting to buy after May 1st. So it's going to be a crazy year, and we've already seen an influx of applications. That means a lot more people that were holding out for 23 because of the higher rates are now getting used to those high rates, are feeling like, okay, we need to get in now before the prices come up. We see it. We're not stupid. That's what I see.
So just to recap, rates are coming down. Probably see it, in my guess, roughly in the 5s by end of the year. And we still have an inventory issue. So those of you on the sideline to buy, now is the best time.
Yeah.
So there you have it. That was our first episode from your NAF Bellevue team.
Breaking barriers.
Breaking barriers, yes.
Call us.